Welcome back to the Global Business Report here on Arise News. I'm Idia Aisian, coming to you this afternoon from Nigeria's commercial capital, Lagos. Investors have turned the page on 2018 and are focused now on trends that will move markets over the new year. Analysts today are pointing increasingly to emerging markets and the vast opportunity for investors with the right risk appetite. Now, Nigeria's economic growth accelerated in the third quarter of last year, boosted by improvements in oil and non-oil sectors. But although further economic growth is also expected in the first half of 2019, Africa's largest economy still faces significant challenges. Joining us with the insight and perspective on the financial development to most likely drive the economic narratives in Nigeria over the first half of 2019 is Segun Olukoya, the Director of Financial Services at Nexton Business Services. Welcome, Mr. Segun, to the Global Business Report.
Good afternoon, Nadia.
Good afternoon, and Happy New Year.
Thank you very much.
Okay, so first, let's talk about payment service banks. What is the context and background behind the new licensing regime and policy?
Okay, so the big context behind it is really the conversations around financial inclusion. Okay. And that measures access to financial services for citizens. Now, in Nigeria, that number is somewhere around 60%. The central bank is trying to move that to about 80–90%. Okay. And in trying to do that, they're trying to create institutions that can help improve financial access. Now, the payment service banks play that role. Okay. Now, in reality, they are banks. You know, they are going to be capitalized, and the regulation says they have capital base of about 5 billion naira. They are also going to compete with other banks. However, the slight difference is that the expectation is they would focus on those areas that are underserved. And
so basically, they're just not commercial banks?
Correct, okay. Yes. So underserved areas and places where, especially the rural areas where there's access to financial is low. Yeah. Correct. So they would also be expected to do the basic things banks do, have accounts, enable pay and receive transactions, and then also support remittances. You know, so you think about it, people send money from the US or UK, you have to go to a bank in the city to do it. Now you could go to these payment service banks. The other attractive thing is that the banks would also work through existing institutions, so agents. So in my village, you could have a shop, a retail shop that could serve as an agent for those payment service banks. So all in all, it's essentially a way to improve financial access, and it's one of the things the central bank is really interested in making sure happens.
Well, I think it's a good move now, but there are some concerns that have been raised about the fact that these institutions will not be permitted to grant loans. Do you think that these are legitimate concerns or legitimate arguments?
Okay, so there is a concern. The capital base is 5 billion. There are people who have concerns that if I put down 5 billion to set up an institution, I would also like to lend, you know, and I might be disadvantaged compared to commercial banks. But the reality is, I think most people, you know, really simply want to have somewhere to put money in and go there and take it away. Yeah. So I think there's a market for pay and receive transactions and for safe keep of money. And I think that is the intention of the central bank. I believe also as this kind of a policy, as the implementation starts, you know, the central bank will probably be open to looking at it and maybe empowering or enabling the PSBs to grant loans. Lending is a totally different kettle of fish. You could lose your entire capital if not done properly. Yeah. Exactly.
Now, but I want to talk about telecommunication companies. Do you think that they would be willing to get into this game, into this sphere? And if so, what role do you think they would play?
Okay, so I sense this policy was largely attracted or targeted at the telcos. If you think about Africa, in every other country or most other countries, the telcos are doing some sort of financial services business, you know, and they're doing it well. In certain countries, they're actually the alternatives to banks. But unfortunately, they've not been able to do that in Nigeria because of the regulation. This regulation permits them to do that. And I think they will probably be one of the biggest beneficiaries of the new policy. And they are ready.
Okay, so can you give me examples of some of the telecommunication companies that you feel are ready?
Oh, so clearly an MTN will be definitely interested in doing this. Like I said, every other part of Africa, they have a big player around either mobile money or financial services. Airtel is the second or third largest payment service bank in India. You know, so there's a clear model they already have that they can replicate. And I sense once the first two are doing it, you know, it will be it would be at a disadvantage if the other two don't do it. So I sense you will get all four of them playing in this space, one way or the other, possibly with partners, possibly without.
Now, but should commercial banks be worried about the emergence of these new categories of banks that are coming to play?
So my view on this is that with enough capital, the right business model, and the right leadership, a small bank will do very well in this country. So the commercial bank should be worried. They start off today. However, in the next few years, they could actually be competing against some of the commercial banks.
But now, on codes of corporate governance for microfinance banks, BDCs, and finance houses, why has the CBN come up with these needs of corporate governance at this point?
Okay. So the commercial banks have always had a code of corporate governance for the last 10, 15 years. I think the central bank had really never focused on it.
Okay.
Now that some of these sectors are becoming larger and more relevant in the financial system, I think the searchlight is now on them. They've operated but not been actively regulated. These codes of corporate governance essentially put a structure around how they should operate. And these new codes, specify quite a number of things. I almost define it as the minimum standards required to run. So very simple things, how many board members should you have at a minimum? What kind of criteria should you have for selecting management? What kind of disclosure standards? All these are things you see in advanced economies that guide the way these financial institutions run.
But what do you see as as the likely impact once these codes kick in?
Okay. So I think the first thing you're going to see is that it will improve the conversations at the board levels. This policy kicked in December 2018. Now, what I would expect is that every board for all these institutions are talking about it. And it has now come to the fore for these institutions. As they start to focus on these kind of things, decisions will be made. So there are very simple example. There are rules around how many years a director should stay on the board. There are probably banks or institutions that have had directors for 20 years. Now, that doesn't create for succession planning. There are rules. There are rules in the code that say you can only stay for a certain period. So you're going to see a lot of, I think, changes in these institutions, and it just brings it to the fore.
Okay, now, but I want to talk about something that's really interesting. So on micro-pensions regarding this proposed framework and policies for informal employees, can you give us some clarity on the context and background behind this policy, this new policy? Okay.
So one of the successes of the Nigerian financial system, I think, has been the pension space. Today you have maybe about 9 trillion naira as pensions, saved in the country. Unfortunately, that policy focused primarily on employees. So people in structured employment have a monthly salaries. Those salaries, at the end of the month, I think 18% gets contributed to this. Now, there's a huge sway of people who are in informal employment. They don't have a monthly salary. They don't have a way of participating in the pension scheme. Now, the informal policy or the policy by PENCOM, to bring this informal sector into the pension system is targeted at those people. Now, they've also recognized that because you don't earn a monthly salary, we must create a system that accommodates that. So there's more flexibility around how they would contribute to the system. There's also some allowance that a certain percentage of what is contributed can be withdrawn, in the case of emergencies and all of that, while a certain percentage is left for long-term use. So all in all, it's probably targeted at bringing maybe another 5-7 trillion naira worth of funds over the next few years into the pension system.
Segun, thank you so much for joining me today to discuss this. I've been talking to Segun Olukoya, the Director of Financial Services at Next in Business Services. That's it for this edition of the Global Business Report. Please keep it here on Arise News. But for now, on behalf of the teams here in Lagos, as well as London and Johannesburg, thank you so much for watching.